Jocelyn, our social media director. I'd like to thank you for your first time helping us, and it is already worth its weight in gold, so thank you. I am Taria Donaldson, and we want to thank you for joining us for tonight's series. We are, today's workshop, we will be discussing things you should know before you file your taxes. So before you get that big screen TV, before you get your new outfits together for 2026, I really encourage you to elevate your thinking and your mindset and to get your funds together for your financial goals. Think about investing in your business. Think about repairs to your house. We have our tax expert who is going, are you also an accountant?
I am not a CPA.
Okay,
I'm
right.
better.
Okay.
Oh,
Come on, what God doing, people? Come on, what he doing? And you got, I cannot stress that these workshops that we have offered this month for Everlasting Words Church 7th annual Black Wealth Empowerment Series, which is offered to everyone, is offered to our community. It's just highlighting the wealth gap that is in our community. But this information is for everybody. This is free information, people.
Yes,
free information. Yes. We are recording tonight's session. Ms. Neal is going to go over it. Katika. I'm going to get it because as a name Jaria, I'm going to get Katika. We are going to get each other's names, so we're going to get it. So, and I really want to thank you for volunteering your time and your services.
Yes.
I mean, when we get to that level of where we can write that check the year before and pay you for your guest speaking services, I'm believing that you'll be the first one on the list to get the check. But I really encourage you, and for those of us who are, those of you who are joining us live, make sure to put your questions in the chat. We do have our social media director who will be checking and answering those questions. And at that, please introduce yourself and take it away. Make yourself at home. You are a guest. You are at home. Have your way. Seriously. Okay.
Thank you. Let's give Jaria a hand.
All right.
So thank you so much for attending in person, virtually. If you're listening in, thank you so much for being here because this certainly is important to me because this is your time as well.
Don't have the mic on. I just okay. Let me turn that on.
My voice carries.
Let me see to make sure we get it online.
You slide it up.
Is it green light?
Is it
Yeah.
on?
You see a green light? I'm short. I can't see.
No green light.
Oh, okay, it should be about. There we go. Hey, there we go.
Okay. If any of my friends are watching, they're probably like, sing, Katika.
Okay, didn't know that. Now we
I get
know.
up to speaker like thinking I'm going to sing every time.
Okay, now we know. Now we know.
Thank you so much for attending virtually in person. If you're listening in, I certainly appreciate your time because your time is valuable as well. My name is Katika Neal. I am going to do a presentation today. Right, I usually teach a class, so I'm not going to teach it like a class. We're going to have a dialogue, okay? And so my heart, my baby, my parent company is Taxes Made Better. I founded this company more than 22 years ago. So after 22, I just lost count, but something like that. And I enjoy helping others, right? A lot of times people just can't find anybody to trust to prepare their taxes or handle their financial information. I currently have clients in 31 states. I'm trying to get to 50. And that has been really word of mouth and just working with integrity. So I'm so grateful to be able to touch so many different families. I offer a lot of services and different programs. So taxes would be my first love. So this, just to tell you a little bit about myself, I am a tax consultant, right? So I have just in the tax industry, I teach tax classes, I sell software, I have my own branded software, and then I'm a notary and loan signing agent and a realtor, so I'm in the real estate world as well. I also help people with business credit, funding, classes, mentorship, The only thing I don't do is drive a bus. I put all of these businesses together and services together because they all go together, right? If you need a house, you need your taxes to be in order, you need your credit good, right? So I don't have to send people to different entities or organizations or different people. They can trust me with just about everything that they need, okay? So that's where all of these great things came from. I'm in partnership with several nonprofit organizations. I am board treasurer for Love Institute, which is actually in Chicago. We service 16 to 24-year-olds. I am partnered with Quad County Urban League, Chicago Urban League, and also You Can. So what's one thing that you've always wanted to learn about taxes? Just give me two people.
How to increase my return.
Okay.
Yeah, that's a good one.
Anybody else? She said how to increase her tax refund.
How to pay the least.
How to pay the least. Okay. See, we have two different perspectives, right? Because some people know I'm not getting a tax refund. So it's more so how can I just pay less money, right, to the federal government. Okay. Well, today we're going to, yes, sir.
Also like to know different options for how to file.
Okay.
Because TurboTax
Okay.
is, you can no longer get the CD
Uh-huh.
and put it in your hard drive.
Yes.
They want you now to go in the cloud.
Yes.
And I'm leery of that.
I don't blame you.
So that's what I'm interested in.
Well, listen, I'm going to tell you a number of options and just different opportunities. And then you always have me, right? So I encourage, people
like
to,
me.
I'm so sorry, to understand, even if you do prepare your own taxes, to understand what you're preparing, okay? A lot of people don't. They just match up the numbers to the boxes. That's not quite how it goes, right? So taxes can certainly feel overwhelming, right? But they're a fundamental part of how our country actually operates. So today I'm going to help you understand the basics of federal and state taxes. We are in a state where we pay state taxes. All states do not, as far as employment tax, okay? So we'll cover what taxes are, why they are important, federal taxes and how they work, state taxes, how taxes directly affect you, and a little bit about business taxes, right? So I'm not going to be able to get into business taxes too far, but I will give you some information. How does that sound?
Good.
Okay, good. All right, so a lot of people have no clue why we pay taxes. They're just mad about it, okay? The history of federal income tax, we're talking about federal taxes, started in the U.S. during the Civil War. So a war is the reason that we kind of pay taxes right now, right? We had to fund a war, right? In so many words. So 1861, our Congress, they passed the Revenue Act of 1861 to help fund the war. That's where this all came from, okay? So that law created the very first income tax in the United States history, and at that time there was just a flat tax rate of 3% on any incomes over $800. So if you made under $800, you didn't pay anything, and then anything over $800 was 3%. Imagine if we were still back there, right? We would complain so much, okay? Way different now. I mean, way different. So that was a short-lived and not strongly enforced law. And then, there was 5% on any incomes over $10,000. Right. So this marked the first clearly progressive federal income tax system. So we're on a progressive tax system. Okay. So everybody does not pay the same amount. Right. So we have tax brackets and all of that. So we're going to learn a lot today, and it will probably help you understand your own taxes, right, as far as employment tax. Okay, so I'm not going to read about Congress and all that boring stuff, right, but just so you know, that's when we started paying the first tax. Okay, who is the IRS? It's scary, right? Those three letters, nobody wants to see a letter from them. You don't want to hear from the IRS, right? So the IRS, the Internal Revenue Service, is a bureau of the U.S. Department of Treasury. So the IRS is actually an administrator, and they work under the direction of the Secretary of Treasury. So the IRS is not owned by the Treasury, but they work for the Treasury. So when you're paying taxes, you're paying it to the Treasury, not the Internal Revenue Service, but they administer right? All of those tax functions. So they have to have an administrator for it. And then that's why you see Department of Treasury. They are over the IRS, okay? So why do we pay taxes? Because they said we have to, right? Okay, that's basically what this is. I don't have to read this huge paragraph, right? So we by law have to pay federal income tax on earned income and some unearned income.
Yes.
Okay? I try to sum it up a little, right, and not bore you. Okay, so we need to comply with tax regulations. What does that mean? That means that even if you don't feel like paying it, you have to pay.
Right.
If you don't think you should pay, you have to pay, right? In the United States. So compliance is just that, complying with the law of the federal government. Basically, no matter how you feel or no matter how it looks on paper. I have people tell me all the time, I didn't file because I owe. That is when you're supposed to surely file taxes, right? So, three main points about compliance. You want to maintain accurate records, right? So if you're writing off deductions or you have expenses, if you have a business, you want to keep records. You don't want to get to February and March and call your tax person and have her hair turning all gray like mine because you brought me 80 receipts in a shoebox, 100 receipts under the mattress. That's not accurate record keeping. Yes.
Do you really have to have each one of those receipts, like if you're doing travel reimbursement, and you get the gas receipt or whatever? Do you can't just put like a average of gas that you do the month, a summary? You need that actual receipt.
So the IRS wants accurate receipts because even a penny over, if 20 million people did that, then you see what I'm saying? So they don't want to let you get away with anything. So you do need the receipts. You don't have to provide the receipts to your tax specialist all the time. I'm not going to keep all of that information. But as long as you provide me documentation, some sort of report, or if I do your bookkeeping or whatever, we have documentation. So the IRS is not going to audit me. They're going to audit you. If they need proof of anything, they're going to come to you. So I don't have to have your receipt. So whatever you told me should be accurate information. I'm not going to come to your house and add up every penny, but you need to keep your receipts. There's a good way to do that. You can actually use apps now. You can scan the receipts in. That way you don't have to have, like, again, the shoebox of receipts. You can just scan it in and you can have everything on the app for you. There are great record keeping tools that you can use instead of, again, at the end of the year trying to figure all the information out. You can do it monthly. And you should be doing that if you are, again, claiming any deductions, expenses, or have to show proof of anything. Any other questions about just record keeping? Yes, ma'am.
Can you, how much you have to put out for medical if you can claim it on your taxes?
So I'm really truly like gonna get into all of that, right? So I don't want to jump the gun. Okay, but I will answer your question. If I don't get to it, say, Katika, you said. Because I know the answers to that in my head. Okay. All right. Adhering to filing deadlines, right? So everyone kind of knows April 15th is just a scary day. You're like, April 15th. However, April 15th is the deadline to submit your taxes, right? That means either electronically submit them, or if you mail them in, they have to have a postage date of April 15th. Now, you can file for an extension, which would give you until October 15th. However, that extension does not prevent any interest from accruing. Your interest is still going to accrue, but you won't pay the fee for not filing on time. Okay, so that extension just eliminates the fee for not filing on time, the late filing fee. But your interest is still accruing if you have a balance. Okay, now if you have tax returns that you didn't file and you're getting an actual refund, you have up to 3 years to file that. If you file older tax returns, they can or cannot, pay it out. So a good thing would be to just file your taxes every year on time to prevent any of that. Losing refunds, we don't want to give away any money. Okay? And then paying, again, I just said this, paying your tax bill on time. April 15th is the deadline to pay. It's not just the deadline to file. Okay? All right. Okay, so we have two primary tax systems in the United States, right? We pay federal taxes, these are managed by the federal government, and then some states pay state taxes, which are managed by individual states. However, the state and the government do talk to each other. So if you don't file your state taxes or you put something incorrect on your state taxes, they have little people in the offices and computers and AI now to see if you did it right, okay? So don't think, well, the state doesn't know what I told the feds, and the feds don't know. They absolutely do. Entities from the state can garnish your taxes, right, if you don't pay child support, parking tickets. Now that's on a city level. But just giving you some examples of, you know, what can happen if you think, well, I can do one and not the other.
Right.
Okay? All right. Oh, yeah, they work together. See, I forget what I write sometimes. But, types of federal taxes. There are several types, right? That's crazy, right? Several types. There's not just one type. We have income tax, right? Paid by individuals and businesses on the money that we earn. Earned income. Payroll taxes, that would be Medicare and Social Security. So if you have a company, you have employees, you pay wages, but you also pay a portion of their Medicare and Social Security tax. All right, self-employment tax, that's a whole different story because you pay the self-employment tax on top of all these other taxes that you're already paying when you have a business. So it's very important when you start a business, you have the proper business structure, that you have the you have everything set up correctly, right? Because you don't want to overpay or underpay your taxes. But self-employment taxes is a whole different thing, and I'm going to certainly share that with you today. Corporate taxes are for corporations, right? Coca-Cola, they pay corporate tax, and they pay all sorts of other taxes. They have employees, they have shareholders, different situation, but they're formulated as a C corporation, okay? So we interact mostly with employment tax, so we'll go break that down a little bit further. We are on a progressive tax system. So what does that mean? The more you earn, the more you pay, right? So the higher the percentage of it is really the truth. Like, well, I made all this money. It's like, you got to pay all this money. Like, that's what the answer is, right? So, example, if you earn $10,000, you might pay 10% on the $10,000, which is really an accurate number. However, if you earn $50,000, part of your income is going to be taxed at 10%, but after $10,001, you're going to pay 12%. So a portion of your income is taxed at a different rate based on how much money you make. So that's why it's called a progressive tax system. So if you're making $150, you're like, oh, I'm in this high tax bracket. Part of your income is in the higher tax bracket, but there's still the first $10,000 is taxed at 10. So every, it's called a progressive tax system. So let me help you with that as well. Excuse me, I have like super bad allergies. I took a Benadryl. There's some right here.
Oh, okay.
Thank you. Just if you see me, I don't want you all to think I'm going crazy or anything. So tax brackets. What are tax brackets? We hear that term all the time. We have no idea what it means, right? So tax brackets are a way to structure income taxes under the progressive tax system. So what happens is they divide your taxable income into ranges, okay? So as you see, there are 7. We can pay all the way up to 37%. That's almost 40%. 40% to me is like 50%. I just jump up to 50%. That's what I think in my head. I'm paying half of my money out. Like that's what it feels like. It really does. This ensures that higher income is taxed at higher rates, while lower income is taxed at lower rates. Right? That doesn't seem very fair, but the federal government says that it is. So. Once you make $20 million, please don't think that you're paying 10%. You're only going to pay that on the first 10 grand. Okay? You're going to be in this 37% tax bracket. Does everybody understand that?
What do you know what the levels are?
The actual tax brackets?
Yeah, like how much for?
Oh yeah, I have that on a different slide for you.
Okay.
So basically, from this, you were saying from 10,000 to this amount to this amount. Sure, I do. I believe I have it in the slide, but if not, I can pull it up for you, but I usually put it in here.
But you were saying, so on the 20,000 example, 20 million. So your first 10 million is under.
No, not 10 million.
10,000.
Your first 10,000 is under.
That's it. You don't get a break because it's literally like, I'm gonna show you
Okay.
right here.
Okay.
Yes, ma'am. So, marginal tax rates, this means the tax rate applies only to the income within a specific bracket, not your total income. So here we go, right? Example, a person living in the U.S., working in the U.S., they earn 50 grand. We'll just say in 2025, right? Clearly I wrote this class in 2023. But that's okay. Okay, you got me.
All right, we understand.
They might have their income taxes follow. This is very hypothetical, right? But this is a great example for you, sir. What's your name in the back?
Dan.
Dan. I'm Katika Dan. So $10,000 on really your first $10,000 of income. 12% is going to be on income between we'll just say $11,001 and $44,725. It's a weird number like that, right? So 10% is only on your first 10, and then we'll use these numbers 11, and then 12% on 11 to 44,725.
Okay.
But then,
Then.
just say you make 44,725, the next bracket would be 22%.
Wow.
So from $44,726 to 50, you could be paying 22%. Now these numbers aren't real. Don't write it down. This is an example though. So does that make sense? Like some of my money is 10% tax, some of it is 12, and some of it is 22.
Yeah.
This one person has 3
It
tax
could be in
brackets.
4.
Or 4.
Could be
Yeah. Right.
however many
Okay.
tax
Depending
brackets
how much
because
money
of
you make.
Depending on how much.
their
you make.
income.
Wow.
Just Dan.
All
So
right.
if you file jointly,
Yeah.
does that jump you up?
So if you file jointly, then you get a higher standard deduction. I'm going to tell you about that. Right? Because the government is now looking at you as one person. You're still, they look at you as one person, but you get double benefits because you file married filing jointly. But when you file separately, different story because now you're looked at as 2 single people. And I'm going to teach you that today too.
All right. They know some single people.
Listen, I do this all day. I could probably turn this off and just talk you through the slides, but it wouldn't help you because you're like, what? So I'm showing you, but I'm telling you.
Yeah. No, this is
very
I'm a
good.
visual person. This is amazing.
Yes.
Yeah.
Yes, and I didn't bring any slides. I usually bring something. I have business cards and stuff, but I did not bring that, so forgive me. I have nothing for you to write on, but I do have pens. Okay.
I wouldn't even know what I was writing.
Right,
So
right.
it's better you talking.
So,
Right.
So this progressive and marginal tax rate really helps, overtaxing lower income earners.
Okay, gotcha.
So they try to help lower income earners a little bit.
Okay.
But if you have aspirations and dreams and you actually want to make, 200, 300,000, then you have no hope. You're just going to pay like 30%, right? All right, we're not taking a break because it just started. So
We're ready.
We're ready.
That's in the wrong place. How tax brackets work. You ready to learn something?
Yes.
Okay.
Yes.
So taxable income. What is your taxable income? This is your total income minus any deductions, exemptions, and credits. Now, everyone does not qualify to actually add, what am I trying to say? I'll come back to my thought.
Okay.
Everybody does not qualify for all of this, okay? Brackets and rates. So taxable income is split into portions, which I just showed you, okay? And we learned about the marginal tax rate. So if your taxable income is $50,000, this is how your tax would be calculated. 10% up to $10,000. So I'm paying $1,000 on my first $10,000 of earnings, okay? 12% on $10,001 to $40,000. So $30,000 of my income is being taxed at 12%. Okay, so 10,001. Remember, we're only at 0 to 1,000. I'm paying $1,000 because it's 10%.
Yeah.
All right. It wouldn't be fair to charge me 22% on $10,000. That's because the federal government is giving us.
Right.
All right. Okay, so now you're paying $3,600 on $30,000 of your income. Are you still with me?
Yeah.
So now we're at 36 plus 1,000. We're at 4,600 up to the $40,000 range. 22%. Now 40,001. $40,001. Up to 50, I'm paying 22%. So now the last $10,000 of my income is taxed at 22%. So here we go. This is why I owe $6,800, because the portion of my income was taxed at 10%,
Right.
a portion was taxed at 12,
Wow.
and a portion was taxed at 22.
Right.
Everybody understand?
Yeah, yes.
All right. Did I break that down?
Yes.
Okay,
Yes.
say with me and I'm gonna bless you.
Right.
Now, all right. So, the IRS recognizes 5 filing statuses, okay? So we're gonna learn a little bit about filing statuses today. So single filers. Single filer is unmarried, right? Or legally separated. Now, you can be separated by paperwork from the court, not paperwork that you wrote yourself because you don't like him,
Right.
but actual legal paperwork, documentation, right?
At the county.
Or if you have lived apart from that person for 6 months or more, you can still file as a single filer or head of household if you have dependents. Okay? So if you move out, George, I don't want to be with you anymore, and he's like, Sarah, I can't stand you, then, and it's been 6 months or more, you can file single or what? Head of household.
Right.
If you have qualifying dependents.
Right.
Okay?
I'm sorry, on that, you have to have qualifying dependents to file. Oh, for the head of household. You
As
have
head
to
of
have-
household. So, right. So single filers to
Yeah.
file single cannot be married.
Right.
But if you are married, you have to be separated for 6 months
Gotcha.
in that year.
Gotcha.
Okay?
Okay, in that year.
Yes, and I mentioned the head of
Consecutively 6 months, right? Or-
6 months.
Oh, okay.
Now, if you live there in January, move out in February, live there in April, you probably got a problem. If you going-
I mean, 'cause people we know have life.
You might
So
have a
I'm just
problem.
asking. Yeah, okay.
It's 6 months.
He's just
Okay,
asking
okay.
for a friend.
I was just asking more
Friend, I just want to know for my friend. So this is very common for people without dependents, right? When I have a person, they're a single filer. Miss Neal, I just have a W-2 in myself. Okay, single
Right.
filer, you get my single filer special. Boom, that's
Right.
cool.
Right.
Now, next status would be married filing jointly, right? So, married filing jointly, who qualifies? Legally married on the last day of the year. So if you get married on December 31st at 11:59 p.m., right? You're
Right.
very courageous and you stayed up that late to have a wedding. I'm so sorry, allergies. 1 second.
Bless you.
Thank you. Legally married on the last day of the year includes couples married during the year or living together in a common law marriage if that's recognized by the state.
Right.
Okay, so in Illinois, you don't file married because you live together. You have to actually
Be married.
Okay, but some states
Yeah.
recognize common law
right.
marriage, and that's cool. But okay, you need to be married to file married here.
Okay.
Both spouses report income, deductions, and credits together. So that's why they say, oh, this is one of the best ways to file because everything is together. You're
Right.
looked at as one person. It does offer the higher standard deduction, and oftentimes it will lower your tax liability. Oftentimes, but that's not the case for everybody.
Okay.
Right? So MFS, married filing separately. You're married. You might live in the same house, but you still decided to file separate tax returns. Why do people do that? Your spouse might have a debt. You might not want to be liable for the debt.
Okay.
Whatever. It's so many different reasons. They don't want to join income. They file married filing separately. It is a legal way to file. However, it limits a lot of the credits: earned income credit, child tax credit, the education credit. So again, they're looking at you as a single filer and they're taking away all the credits. So it's not a benefit a lot of times. And the really wonderful thing about married filing jointly status, there are forms that your preparer or tax specialist can file that will still remove the liability from your spouse's debt and take that off of you. So if you were getting a portion of the refund, you would still get yours and they would just have to pay their debt.
Oh, wow.
Right.
There's a special form for that.
Okay.
And you would still file married filing jointly.
Okay.
Okay? But I don't give away all the
Right,
sauce,
of
right?
course,
So I'm just
right.
telling you
Yeah.
on Zoom.
Right.
So head of household is very common. A lot. I'm head of household, and I'm like, there are certain qualifications that you need to meet to be head of household. First of all, you have to be unmarried, and then you have to pay more than half of the cost for keeping up a home for a qualifying person. Qualifying person does not have to be a child. Qualifying person could be your parent. It could be a dependent relative. Yes, absolutely. And another thing, to file your parents as dependents, they don't even have to live in the home.
What?
Yeah, I'm just putting that out there because I might not get to that point.
Right here. I'm about to amend some taxes.
She's like, wait a minute. I'm supposed to file. Yeah, so they don't have to actually live in the home. That's a rule. Yeah.
I'll get your card there.
Yes, ma'am. You have my personal info.
Right.
So what are the benefits of filing head of household? Generally, a higher standard deduction than single, or married filing single, ready to mingle, or married filing separate. And then moderate income earners, it offers very favorable tax bracket and credits for moderate income earners.
Okay.
Say that 5 times.
Right.
Qualifying widower with dependent child. So if your spouse passed away and you have a dependent child, that is another filing status that you can actually use, right? And then you can use that status for the current year and 2 years after the spouse passes away. Okay. You can't get remarried. Like if you get remarried, they take the credit away. That filing status away. They're like, no. This new person has to take care. Okay. All right. So those are the 5 filing statuses. I'm so sorry. Did anyone have a question on your filing status? Did anyone sitting here not know? Yes, Dan.
Okay, so let's just say I want to see if if it's better to file separately instead of jointly. Who claims the property tax and all that stuff? Because we both own the house. So how do you do that?
So then you would have to make a decision on who files the property taxes and all of that, right? You have to decide
so only one
that.
Only one person can claim
Well,
the deduction. That's what you're saying.
Actually, if both of your names are on the mortgage and you both pay, then you should be able to split that up evenly. If only one name is on the mortgage, that's a different story, right? Because even if they help you pay it, they're going by the actual name on that the loan is under.
That makes sense.
Yeah.
I'm just curious.
You be curious.
That's a good question.
It is a great question. So let's talk about. Am I going too fast?
No,
Okay. Let's talk about deductions. Okay. So we have standard deductions. We have itemized deductions. That's the word I couldn't think of earlier, but I knew it would come back to my brain. So standard deduction is a fixed dollar amount. This is going to blow your mind. It's really cool though. That the IRS allows you to subtract from your total income before calculating your actual taxable income. Okay. So it reduces the amount of income that is actually subject to federal tax. It's the simpler alternative to itemizing deductions. A lot of times people itemize their deductions. That's when they individually list each deduction, right? They itemize the deductions and they still don't come out to more than the standard deduction. So you would really be cheating yourself if you actually itemize your deductions. Most people don't have enough to do that, so they take the standard. Everyone gets is allowed a standard deduction, and that's going to be based on your filing status. So let me get into that, right? So let's see. Standard deduction is automatic. You can it just appears, right? You get it no matter what. Okay, you don't have to report any expenses or track anything. It's just something that the federal government allows, right? And it's available to nearly all taxpayers unless you choose to itemize. Now, the standard deduction depends on your filing status, right? We learned about the 5 filing statuses. The 5th one is a qualifying widower with a dependent, but I left that off for whatever weird reason, but I know that it should be there. It adjusts annually for inflation, so every year you'll see like $50 added to the standard deduction. Maybe 500 is very low, but they do increase it every year, okay? If you are 65 or older and or blind, you get an additional standard deduction added, right? So here we go, 2025. I updated it from 2023. Single filers, standard deduction is $15,750. Okay. Married filing jointly and the qualifying surviving spouse, the widow or widower, with a dependent is $31,500. Married filing separate goes back to the single filer deduction. See this? And then head of household is 23. So head of household is going to be more than single but less than married filing jointly. Okay, so let me explain what these numbers actually mean. All right, I didn't mean to go to self-employment taxes yet. That's what you get when you're trying to merge stuff together. But we'll come back to that. So standard deductions. Let's say you're a single filer with an income of $50,000 in 2025.
Okay.
2025. I've taught this class for like 3 years.
Right. All the years.
All the years, but if you take the standard deduction of $14,600, we're using just fake numbers, okay? Don't write this down. But the real deductions are on the page before that I showed you. Those are that. Let me go back.
$15,750.
Let me go back. 15,700. That's Dan.
Right.
Dan. You are the man.
Right. You hear it off the head.
Yeah. So we're gonna just use the fake numbers though, right? Because my numbers are coming out correctly with my fake.
Okay, right. On the masses.
Yeah.
I'm cheating.
Yeah, you're reducing it.
That deduction, right.
I'm no good. But like, just say this is John Smith's fake tax return. I'm teaching you intro to taxes. Now, Dan, don't bust me. So if you're a single filer with an income of $50K in 2025, and you take the standard deduction of $14,600, so you made $50, right? I'm gonna deduct $14,600. So now I pay taxes on $35,000 instead of $50,000.
Okay.
That sounds really good.
Absolutely.
Right? Okay, so that's the standard deduction.
Right.
So if I itemize my deductible expenses, say I have, mortgage interest, real estate taxes, I donated some clothes to the Salvation Army, and it came up to be $10,000. So from my $50K in wages, I can deduct $10,000. So now I have to unfortunately pay taxes on $40,000 instead of $35,000. So we want to take the standard deduction.
Got you.
Okay, so does that make sense? I made 50. Uncle Sam said, "Hey, Katika, you only have to pay taxes on $35,400." But I'm smart, so I said, "No, I want to deduct all of my expenses," and it came out to 10 grand. Now I'm unfortunately paying taxes on $40K, and guess what? Uncle Sam is gonna let me do that because I had no business doing it. Right? Okay. So in this case, taking the standard deduction saves you money, right? But that may not always be the case. Maybe you do have enough deductions, right, to exceed the standard. Yes.
Is there a cap on what you can deduct? Is there a limit? There's a limit, isn't there?
On your, it's a certain percentage of your income.
Well, is there I thought there was a cap that they that they changed something where
It's a certain percentage of your income, and I have to see what that is. But it's
it's not a flat amount.
Right, like you can't deduct. So if you make 50, you can't deduct 50,000. It's a certain amount. It might be 50%. I'll look. 60%. I'll look that up, okay? Because I can't remember off the top of my head. But it is you can't. Everybody would just write off.
Right. But if there's a cap, it gets cut off.
Yeah. But it's also a percentage of your income. So you can make 50. This person can make 100. It's not going to be the same amount. It's still a percentage of your income.
Based on your.
You might. Oh, okay.
No, go ahead.
Get into it. I just found this piece of information out earlier this week about the charitable donation. The standard, the amount it increased, I believe. The charitable donation.
A couple dollars.
Okay. Okay, but
Don't go and spend it
Right.
all in one place.
the person who said it act like it was a major.
But I will share this because I
Okay.
did not update this information
Okay.
on my slide because this just happened this tax season
Okay.
as
Yeah.
part of the big beautiful bill. So we don't
Right,
have
that's
to
what I-
pay
okay.
taxes on tips up to a certain amount, and also overtime up to a
Okay.
certain amount.
Okay.
Yes. So that's a great thing for people who work a lot of overtime, and
Right.
that amount is deducted, and also tips. So if you work at a restaurant, things like that, we always pay taxes on tips,
Right.
everything, unless you know
Right.
you sneak it in your pocket as cash.
Right.
But
Yeah.
you're supposed to pay taxes. So now there's a law, or part of the tax law, part of the big beautiful bill, where we don't pay taxes
On the tips.
on tips or overtime. I think is up to $10,500 or $12,500.
Okay.
Forgive me for if I'm inaccurate with the amounts, because this is what I do all day, and I'm telling you, it's hard to remember, but I think it's
Numbers.
12,500. But when we take our break and come back, I'll have the exact numbers for you,
Okay.
because I can't remember like exact. So forgive me, I'm still smart. and I
We'll
know what I'm
forgive
talking
you
about.
this time.
I still know what I'm talking about.
Right, right.
Those exact numbers. Sometimes I'm like, I don't know.
Yeah.
Something up there, 10,000, 12,000, especially if it's a very,
Right. We
Right.
couldn't have called you on it anyway.
very new law, right? Yeah, but I know I want to be
Right.
accurate, and
Yeah.
sometimes I
And you're
just
leading us in the right direction.
Absolutely.
Yes.
That's what we're looking for.
You
Some
get
of
the point.
Yeah.
Right.
Okay, cool.
Very much.
There you
So
go.
itemized deductions are specific expenses that the IRS allows you to subtract from your taxable income, reducing the amount of income subject to tax. Instead of taking the standard, which we just discussed, right? For a single, it is $15,750, right there. And you can itemize eligible expenses on a certain schedule, which is called A, if that amount, and I made it bold, exceeds the standard. That's the
Right.
only time you want to do that.
Right.
Otherwise, it
Yeah.
doesn't make any sense.
Cheating yourself.
But I have clients all the time, I want you to put this. So I'll still put it in there, and I'll still use the standard deduction,
Right.
and I'll tell them,
Yeah.
I just added it because you needed to see it.
Yeah.
That's the one I was talking about, number 2. It's
State.
got a cap, it's capped at 10.
Oh, so
Okay.
state and local income taxes, property taxes, and sales taxes. This deduction is at 10,000. It's capped at 10, and then 5,000 if married separately.
So that's still 5,000 each, right? It still be the 10.
Married filing separately. Remember,
Oh.
it's 5,000 each, but
Right.
they still. You look at it like this:
Right.
if I make 20,000,
Mhm.
and my husband makes 40,000,
Mhm.
and I filed, I'm filing separately, and I make 20 grand, right? So I'm making 20. I only get $5,000 deduction. But if I file with my husband, now we're filing 60,000. Now we get 10. It's still because you're filing together.
Okay.
It's just you just have to look at it as, if I don't file with my spouse, I'm filing as a single filer. So everything is like cut in half.
Yeah. Oh, okay.
Yeah.
Gotcha.
Yeah.
I see.
You know what I mean?
Okay, see.
And when you have dependents, and it just
Yeah.
it gets messy, because now you're really
You
truly
lose
paying more
that.
taxes and you don't
Separate,
realize
yeah.
it.
A lot of the
Mhm.
credits and stuff.
Okay.
Oh, you want us to know about somebody asked me about, yeah, see, I know I had mine here somewhere.
I'm with you.
These are just common deductions. What time is it?
Oh, I forgot all about that.
That's
Man, yeah.
650.
Okay, so 10 minutes, we just take a break, like a short, like 5
Sure.
minutes?
Yeah, yeah,
Okay,
yeah.
then I can drink my water and
Yes,
stuff.
absolutely.
Common itemized deductions would be medical and dental expenses. That is like a very common, like almost number one, right? However, the expenses need to exceed 7.5% of your AGI. So if you make, let me get my calculator out, or somebody gonna help me.
No, you go ahead and do it.
I'm not calculating. I'm the student today. You know.
Come to learn.
Yeah, yeah. Minister B said, you go ahead and pull that out.
You're not wrong. I know. I do numbers in my head. It's so crazy. My guy is always like, how did you know that? I'm like, I just can see the numbers. Like, I just see them.
Wow.
So we'll use our 60, we'll say 60 grand,
Okay.
Okay.
right?
Mhm.
So $60,000, that's what I earn in wages for the year,
Okay.
right? 7.5, this new update is too much. 7.5% All right, so 7.5% of my 60 grand is 4,500, so $4,500.
Okay.
I can deduct anything over 4,500. So if I have 2,000 in medical expenses, can't deduct it.
Oh,
3,000 in medical expenses, I can't deduct it. $4,501.
okay.
I can deduct the $1.
Okay.
So it's over 7.55% of your adjusted gross income.
So close.
Because some of my husband's medical, the deductible is very expensive.
Mm-hmm.
Because he's a heart patient,
Yes.
and a lot of that medicine and
Copays and
copays and
stuff. Wait,
things.
is copays in
And
there?
copays is in there, prescriptions, doctor visit, copays, healthcare premiums not covered by your employer. So anything that you're paying, it has to be out of pocket. So you can't
Yeah.
double dip, right? So
Right,
it has
right,
to be your out of pocket expenses.
And that can be with mine too, right?
Yeah,
You can
because
put
you're
her both
filing
jointly.
jointly. So it's
Okay,
gonna
see.
be, yeah, it's gonna be 7.5% of the total
travel?
adjusted income, and it's over 7.5. So
Okay,
you don't just
okay.
get, for the first dollar you spend, it's like zero.
Right, right.
I'm
right,
saying,
right.
right? So that's something a lot of tax or taxpayers don't know.
Mhm.
Yes.
Not trying to get into the weeds of it, but with the medical and dental, especially with the doctor visits, if you have to go see the specialist in Chicago, that travel distance.
Travel is included in the there's a actual space, or I should say an allotment for
The government
Travel.
reimbursement
for
amount?
travel.
Okay.
No, for travel expenses, because you're traveling to and from your appointments,
Right,
or
for
you
the
have to go to an hour away
Yeah.
or something
yeah,
like that.
yeah.
So there's mileage included in that as well. Yeah.
Because I
You go
saw that
to
doctor visit.
Downers Grove a lot.
Yeah,
For him
if
to
you
the hospital
pay,
there.
if you pay transportation services
Okay.
and things like that. So again, if it's
Oh,
anything
that's right.
over
Keeping it
7.5,
from being
so
over
contacts,
7.5.
glasses, like all of that you pay out of pocket.
Oh,
I know I pay for my glasses.
Right, I didn't think about that.
I vision insurance covers like $2.
Nothing.
Right,
Right.
Yes, Dan.
and I had two eye
Insurance
surgeries.
premiums count for deducting?
Insurance premiums not covered by your employer. Yes.
Okay.
Right, so if you're paying,
Out of anything that you're paying yourself.
right.
So not that you pay
Your co-payments
monthly
and stuff.
for your employer for the insurance. No.
Right, right.
If you're paying extra money on top of that, so if your employer, if you're paying your insurance from your check to your employer, that part doesn't count. No,
Right.
no, that's called double dipping.
How's that double dipping?
Because your health insurance premiums are partially covered by your employer.
Oh, because it's benefits.
So
It is
it's
benefits of an
still
employee.
that's they don't really
But
look
they're
at
not
that.
paying the whole thing.
There anything
Yeah,
once
yeah.
again not covered by your employer. You have to figure that out and know what that is.
Yeah.
I wouldn't know
Yeah.
what's not covered by your employer. So you do have deductibles, so you have copay and stuff like
Yes,
that. So
yeah.
you count that,
Yeah.
but not just what you paid out of your pay. It's untaxed money. So you don't get to. It's called a double dip. You don't get to do that.
They're not letting us do it, damn.
This
No
year I
double
had
dipping.
this year I had double surgeries on my eyes.
Oh, right.
You know, I could have claimed that with all the other
You can always do an
medications.
amendment.
Huh?
You can always do an amendment.
Oh, look, you got an assistant in the
I know.
audience.
I can amend them for you.
I would have to get all that together, you know,
It's no
but yeah,
problem.
between that and all of the
Not like you at work or anything.
I'm
I mean, you can get it
the
together.
MRIs that he does and everything,
Mhm.
we have to pay for those.
Right.
Seriously,
Yeah,
though,
we
it's
have
very,
co-payments.
it's very, very high. You
Yeah.
need to consider what you've been spending out of pocket.
Yes,
The
yes.
cost of medical has been insane.
Insane,
So,
yeah, and it
that-
has, and even your specialists,
Yeah.
you're paying $45 a pop
that's worth
Mhm.
just to
revisiting
go in
for
there to
sure.
spend maybe 20 minutes with them.
Mm.
Yeah.
Mhm.
You know, and they'll tell you, oh, take this and you'll be all right.
Right.
You know,
10 minutes,
10
3 minutes. They
Yeah.
just look at your eyes and make sure.
yeah, yeah.
That's good. Okay.
Mortgage interest. So interest paid
That's
on the
right.
mortgage for your primary or secondary home is deductible, right?
Mhm.
Applies to mortgages up to $750,000, and you have to have purchased after December 15th, 2017, right? Charitable contributions.
Mhm.
If you had a house before,
That's not what that says.
Oh,
So
okay.
interest paid for your primary or secondary home is deductible, is subject to limits. This applies to mortgages up to $750,000 for homes purchased after December 15th, 2017. So they're saying that with the secondary home is let me get my thoughts together. Subject to limits, but it only applies to mortgages up to $750,000. So if your mortgage is over $750,000 and purchased before December 15, 2017, then this does not apply.
Oh,
That's
okay.
what that's saying.
Got
I'm
you.
sorry.
Yeah.
I had to read it like 3 times, like, no.
Yeah.
So
Okay.
up to 750,000. So if it's more than 750 and purchased before this date,
Okay.
that doesn't apply.
Okay. But in today's
Dan,
world,
what
they
kind of
can't-
house you got, Dan? 'Cause
Right.
it's like, wait a
I'm
minute.
getting nervous.
Right.
Okay. Let me know, Dan, what you do for work, Dan.
No, it's not that
We
much.
want to know too.
I was looking at 2017. I was getting scared.
Yeah, I know. We don't want to
So donations. So this is the percent, the 60% I was trying to tell you about. So if you're donating
okay,
to
yeah.
nonprofits, or nonprofits include churches, right?
Yeah.
The YWCA, Goodwill, and things like that.
Mhm.
So up to 60% of your adjusted gross income. So you can't. They're saying you
Right.
can't write off 100%. Okay.
Is that cap if you make a certain amount of money?
Just 60% of your AGI, whoever
Oh, okay.
whoever you are.
Okay. Adjusted gross income.
Yeah.
Okay.
Adjusted gross income.
I think TurboTax has been screwing up my taxes.
Oh.
Well, TurboTax is not a person.
It's a computer. Yeah.
That's a good answer. Yeah. That's a
It
good
ain't paying no
answer.
taxes. It's a computer.
Yeah.
I'm gonna.
So
Yeah.
if there's a federally declared disaster and you had losses or theft or anything, you have deductible. You can deduct those losses. as well.
Oh.
That's a side issue. But if you're in a place like a state where the president won't pay you FEMA, can you still deduct that?
If it's a federally declared
But if it's
disaster, so
declared,
it has
you
to
should-
be
right.
declared as
Oh.
a disaster. Like if your basement flooded because your sump pump
Right.
went out, they're not.
It's not gonna.
Wow.
Okay.
So the
I'm
state-
just being real because
That's a
wait a
disaster
minute, I had a
area.
disaster. It was a disaster just to your
To
home.
you.
that
To
you
you.
lived in.
Not to the community. Yeah.
I'll replace
That
it.
drip that went down my wall was
Right.
not a disaster to my
It
neighbor.
was a tragedy though.
I know,
So,
right? And it cost
We
a pretty penny.
we're at the 1 hour mark, right? So
Okay,
I want to give
want a break?
everybody like 5 minutes,
Oh,
to
yeah,
just take a
definitely.
break,
Yeah.
and then we'll come back and we'll
Yeah,
talk about
yeah, I would do a
itemized
commercial.
deductions.
Okay, yeah.
Yep.
You can do a 5-minute commercial, all right.
Well, I'm
Okay.
gonna do a commercial for the church.
Go
Okay.
for it.
Is there a commercial?
Yeah, no, you can go ahead and step out. Yeah.
She's the commercial.
Yeah,
Oh.
I have the commercial.
Okay, you have one.
I know we are.
All right, I'm just gonna sit down.
Yeah.
That's all I'm doing.
I'm just glad I'm not doing it no more. I am so glad I got relieved.
You got
On
really.
camera duty. That's it.
I love it. I love it.
Oh, it's live?
Yes, 'cause we're still working on our behind the
We
scenes.
got a new person that can edit.
Yes. You can't hear me? What?
It's because it's
Oh,
not your
it's
fault.
not Thank you, Facebook family, as we here at Everlasting Word Church work out our technical things. And I want to invite everybody to come out Sunday. Our Sunday service is at 10 a.m. We are located at 22 North Highland. Bishop Jeffrey Donaldson is our senior pastor, and co-pastor is Janice Donaldson. And then for March, we will also be doing, we'll be celebrating Women's Month. I think it's actually Women's International History Month. And then Women's Day is March 8th. So we will be celebrating that month with a financial literacy book club. We will be discussing the book Money Works for Women. And they have 4 different characters, and each week we'll go over with those characters the financial decisions and the money stories that they had to face. It's going to be pretty exciting. We encourage you guys, there's information on that on our website, And we encourage you to come out. This is once again free information to empower yourself to set those financial goals for yourself for 2026. It's still not too late. And if tonight has been helpful and you've got some nuggets today, please let us know. Make sure you comment on our page and let us know. Is there any announcements? First Lady, do you have any announcements that you would like to do?
When is our block party?
Yes, thank you, Bishop. Our annual community block party is June 6th this year. When we block off the street, this year we will have a car show. Classic car show, to be specific. And I believe we're also going to have back to school supplies. We got the DJ. It's going to be amazing. Good food, barbecue. We got the taco truck that's going to come out. We have small businesses that will be here. It's just going to be an amazing time. And as we know, for the month of June, it is National Home Ownership Month. So we want to highlight those different activities and things that will get you closer to your goal of home ownership. Or if you are a homeowner, things that will help you preserve and keep your home and protect your wealth of your home. So those are just a few things that we have coming up. Yes, Bishop.
And what is that women's book club thing?
Yes, the announcement that I just did 2 minutes ago,
well,
but I'll repeat it. No problem.
Oh, great.
No problem, because Bishop was listening.
You said during the day, but yeah,
Yes.
you didn't say the 4 weeks.
Yes, I
part,
did
did
say
you?
there was 4 weeks,
Okay.
and then there was characters that we were. Yes, but that's okay for some of
Somebody's
those
talking to
that
me.
might not have heard.
The
So
sister
yes,
to sister. If you
the
could
sister to
explain
sister that is this Saturday, correct?
Mhm.
We'll be having a movie. What is that movie?
When the inspector calls.
When the inspector calls, and it is at 3 p.m.
Yes.
And it's 3 to 5, and it's popcorn in a movie. It's a really good movie, and there will also be discussion afterwards.
Yes.
The movie's about an hour and a half or so, somewhere around there. And then afterwards, directly after the movie, there will be a discussion. It is open to all, right?
It is free.
It is free, and we will be discussing just different topics. It's really, and what happens at the session stays in the session. We really meet you where you're at and just provide that wisdom and guidance just that we all need during life. So it's really just a chance to meet and discuss and have a great time. Really, truly a time of fellowship with others. So, yes.
And in March, the expo?
March 21st, we have the expo that will be at Holiday Inn on Orchard Road. That is empowering your wallet, which we're talking about different topics financially. We are really big about equitable access to economic resources in the community at Everlasting Word Church. So you are always going to hear us promoting something about empowering yourself financially, getting yourself back on track financially. We are always going to spend something with that. So in March, that's going to be amazing. We're going to have vendors there, and we're also going to be having topics about trauma and how to overcome trauma. So it's going to be really powerful that whole month. So.
And then we have a Texas Roadhouse for me.
Yes, and this church is pumping. So yeah, because I had a plan on. Yes, March 16th, Tuesday evening, from 3 to I think it's from 3 to 9. I had the flyer, and we will.
3 to 9.
Yeah. Proceeds from Texas Roadhouse on Route 59 will go towards our financial empowerment, our women's financial empowerment series. So we really encourage the community to come out. You need the flyer. You don't have to print it out. It can also be on your phone. So that way they know that proceeds during that time will go towards that event. But that is March 16th, 3 to 9 at Texas Roadhouse. Proceeds go to the Financial Empowerment Series, the Women's Financial Empowerment Series. So if you can't donate, send that flyer to somebody. So that way it can count as your donation.
Yeah,
so,
right.
okay? I need you to donate. So if you don't donate, you send somebody in your spot to donate. So, and thank you guys for listening to all the announcements. And we're still on our break.
And when you're ready to start, just come on and join in.
Okay,
No pressure when
like-
you're ready.
Okay, like just 1 minute.
At home, take your time. So we appreciate you. That's a lot of information you're giving. So.
I'm trying.
Yeah, that was good.
That was very good.
My social media
Person.
She takes breaks quite often. She takes breaks while she's sitting there.
I swear right there.
That's all right. I feel like I'm in the twilight zone.
I'm coming, I'll wait on my kids to respond.
No, we're
Sorry.
just
You
playing.
still have it rolling?
I found the tax bracket.
Oh, did you? Okay. Break it down for us.
Okay, so, 10% is, it's now 11,925. And then 12% is 11,926.
Okay.
And then 22%, and you know, it goes to
Right.
the 48, you know,
Mhm.
22% is 48,476. And then 24% is 103,351.
And after that, it just goes down.
And then 32% is 197.
Who's making that?
She said,
Then the whopping 35% is 250, and then 37% is 623,000.
I will gladly pay that.
Make that money.
If you could make it up.
So I'm not at the top.
it sounded like a Dan. You were like, that's all I can get at 750. You're like, damn.
I was
Right. He was on
Asking for his friends. He got some friends.
that's not how I was interpreting it.
Right.
Man, but you do kind of understand now why people are, why that other class is
I
like,
would.
yeah.
I remember this episode of The Good Times back in the day when this couple divorced because they got more money. They got all the kids together and told them we could make more money divorce.
Divorce.
And all the kids, y'all can't divorce, been married 60 years. You know?
What?
And then they needed more money for Social Security.
I was sad when I lost dependents.
Oh, right. It sounds like you need to get them all back in. Yeah. Well, my daughter just said she's gonna remember that claiming your parents. She's 14. She looked at me and was like, "Oh, mental note. Yeah, she gonna claim me."
I think she's not listening.
I want to claim my dog. He's
Yeah, I did. Like I said.
I want to claim my dog. He's expensive.
You know what though? Honestly, if you use your dog in a business, you kind of could.
Oh, and you can adjust the mic. It was at my level.
That's all right. You're tall. You're tall.
Thank
You're
you.
tall. So no, I wanted to let you know. So for 2026, or we're in 2025 tax filing year. But for 2026, there will be some changes on the deduction. So it wasn't for 2025, but for 2026, they're actually going to, you will get less itemized deduction opportunity in 2026, depending on how much money you make. So if you're in the 37%,
What happens to the big beautiful bill?
that's what the big beautiful
You're a
bill
billionaire. It's beautiful.
for 60. I'm sorry, for 2026. So I'm not gonna go into that all the way, but for next year, just so you know,
Oh.
To contact you.
yeah, call Katika.
Talk to a person.
One sip of water and I'll be ready. Itemized deductions. Does anyone itemize?
No. Oh, okay. Yeah, you got one.
Yeah, through TurboTax.
He's like, TurboTax. I'm telling you, that's not a person, Dan.
I'm scared now.
TurboTax
But
has
I'm
been doing
scared.
some
I'm
things to
scared.
you, Dan.
Right?
You out.
I'm scared.
Dan, you need a tax professional that will answer all of your
Yeah.
questions like I do.
Right.
That's what you need. So what should you itemize? Itemized deductions, this makes it make sense if your total deductible expenses exceed the standard deduction. So that 15,750, right? It sounds right. If you don't have 15,000 or just say like 16 grand, in standard, in expenses, then of course this will not really help you, right? So who itemizes, right? Homeowners with significant mortgage interest, high income earners in state where they pay high property or income taxes, substantial medical bills, you said the surgeries and all of that. Also, it does require, charitable donations as well. You pay your tithes, you donate to charity, things like that. So again, substantial. If you're doing like $500 a year, it's not going to help you, right? Just being honest. Yes.
If you have business, if you do things in other states, would you want to do an itemized deduction as well too, or
What do you mean?
like sometimes it'll ask you. It'll ask you like, did you pay taxes in this state, or did you purchase things in this state, or whatever? Would you want to do a itemized deduction then, or that itemized deduction is really like for someone just you're dealing with just your state, simple, these type of things?
I mean, when it comes to like if you own a property or something in another state, then
sometimes I'm just thinking of some of the questions.
not like if you buy like groceries or something in another state.
No, but it'll ask like, did you get earnings, or did you do gambling in another state, or did you do other things? Like
so
that's included.
Oh yeah, so state.
Okay.
So it could be from state to state. We're on a
Federal,
tax
Oh,
level.
still federal.
So
Oh,
this
okay, I'm
is
sorry.
so on a federal level, then federal taxes are federal taxes across the board.
Whatever you do.
Yes,
Yeah, that was a user error.
No, that's
Sorry.
okay. No, that's what I'm here for. Again, detailed record keeping. You don't want to try to find all this information at the end of or February, March. Receipts, bills, donation, acknowledgments, churches give, the letters of, what you pay for tithes, things like that. If you drop off at the Salvation Army, they give you receipts. You want to keep all of that. You can't just, they don't take your word for it, especially when it looks a little funny, okay?
Dan.
It's a little funny, Dan. Dan's like, TurboTax did.
When that Bill Clinton was deducting his underwear from his taxes.
Yeah. So, you have a question?
I just wanted to clarify, so I think it gave me the standard deduction, but it made me put all the stuff in anyway.
Oh, wow.
That's what I'm saying. You need a tax professional. Then I'm going to keep telling you that. She never put it in. She would have told you how much do you have in itemized. You'd have said 5,000, and I would have said we're not using that. But TurboTax.
So then I don't have to enter it.
It doesn't help you. You're just really like
That's
I said. I have.
So is this extra work? I did extra work for
Dan.
that.
Give Dan my number.
I'm gonna give it to her. Yep, I'm gonna give it.
All right.
We're gonna have that come to Jesus conversation. Yeah.
We did that example already prior, so that's okay. Here are some federal tax forms that you may see, right? Again, if you're filing your own taxes, or just to review your tax return once the preparer provides it to you, you still need to know what the forms are. So the 1040 form is your actual tax return. That's going to be the meat of your tax return is going to be a 1040. Okay. This is where you file. This is a form used to file your taxes, right? You report your income, deductions, credits, liability, all of that. Okay. All individual taxpayers use the 1040 form, and then you would be familiar with wage statements. That's the W-2, right? I'm not going to go through each and every one, but then there are 1099s that a lot of people are not familiar with. Right. 1099s report income that is not earned as a wage. So 1099s will not have wages on them because taxes are not taken out. Okay, so 1099 NEC, freelancers, contractors, any door dashers, Uber drivers, or somebody like that, they will receive a 1099 NEC. 1099 interest will come from like bank accounts and things like that, anything that you earn interest from. 1099 dividend forms, investments, you were paid out dividends, you're invested in stocks, things like that. 1099 miscellaneous. So just say you have a nice CD out, your first gospel CD.
Right.
What's my friend name right here?
Jocelyn.
Yes, our director of social media.
Right.
Jocelyn, just say you get booked right after your debut today. You get booked at like 10 churches to do their setup, okay? So they might say, man, Jocelyn is amazing at that, and they're paying you on a 1099 because they paid you, right? So you're not an employee, you're a contractor because you work for yourself. So you'll get a 1099, right? But no taxes are going to be taken out, so you would be responsible for paying those taxes at the end of the year, or you can pay quarterly taxes, right? This is for more self-employed individuals. If your CD or your book takes off, you sell 100 copies, you usually get a 1099 miscellaneous, okay?
I know somebody's using like DoorDash and all this stuff to make money to get caught up on their bills. So they need to be setting something aside from that, because they're just trying to make bills each week, and then this thing's gonna hit them at the end of the year with a.
It always does, because you have to look at it like all of your income is just taxable, right?
Right.
When you have an employer, your employer withholds the money
Right.
for you.
Right.
When you
Right.
work for yourself, nobody's withholding anything.
Right.
So
Yes.
therefore,
Yeah.
what really are you expecting as a refund because you didn't pay anything into it? So that's why it's a great idea to pay quarterly taxes, right? If you know that you're going to owe,
Right.
or you don't have anything to offset your tax liability. Okay. Any questions about 1099s or the forms that your income would usually be reported on? So those are the basic forms: 1099s, W-2s. You're going to see 1099 or W-2. Okay. That's pretty much it for the income.
Okay.
And then the 1040 is the form that's produced after you actually input that information, and it produces a tax return. Okay. A lot of people get it mixed up. 1040 and 1099, they're not the same thing. The W-4 is the form that you fill out when you start a job, or if you want to change your withholding at work. So that's a W-4.
Not a W-2.
Nope, different form.
Well, okay.
But you'll hear that word like W something, so it's a withholding. That's what the W is for, W-4. Okay? W-2 is for wages. That W is for wages, and that one is for withholding.
Okay.
Okay. All right. What's a dependent? Okay.
Right there.
All right. So a dependent is someone who relies on us, all right, the taxpayer, for financial support, and you can claim them on your tax return to reduce what? Taxable income through credits and deductions. Dependents are typically children or other qualifying relatives. So we have qualifying children, right? This could be a child, stepchild, foster child, sibling, step-sibling, or their descendants. So grandchildren, great-grandchildren, great-great-great-grandchildren, nieces, nephews, or any descendant of any of those people. Okay? They're qualifying, they're related to you, even a step-sibling, because they're now related to you by law, right? Even if you don't want them, they're related by law. Okay? He's like, let's specify that.
Right.
So qualifying relative, a relative, or even a non-relative who meets specific IRS criteria. Once again, not what you think, but what the IRS actually says. Okay? So benefits of claiming dependents. There are all sorts of credits, right? These credits have gone up because Katika wrote this in 2022. So Dan, I know you're gonna double check on it, but it's a little bit more.
My kids are grown.
He's like, oh, I don't need that dependent. I don't have any dependent. I want to take my stuff to donate. That's what I'm worried about. You guys are a great crowd, for real. Like, you are so funny. Sorry, let me get my lips together. I'm just talking up here. I can't taste anything.
Oh, no.
Yeah. Mouth is just dry. I'm totally fine. Under age 17. So the child tax credit is for children under age 17. So if you see you've been getting like these nice refunds for a while, and then little Johnny turned 17 that summer, and you're like, what happened to my extra $2,000 on my taxes? That's what happened. It went down to $500 because now little Johnny is over 17, and now you only get the credit for other dependents, right? Qualifying dependents who aren't eligible for the child tax credits. So those are dependents who qualify, right? So it could be your mom, it could be your 20-year-old who doesn't have a job, right? I'm just saying, it could be,
In the basement.
right, living in the basement. He's like, I know the story. Earned income tax credit, right? This is for low to moderate income earners. Once you get over, like, in the $50,000 range, you no longer even qualify for that credit. So again, I get the story, oh, my friend got $10,000, I got $1,000. Well, yeah, you made $80,000, so you don't qualify for this credit anymore. So it's for low to moderate income taxpayers. You do not have to have children to receive the earned income tax credit, but that is usually going to be the case that you see. Yes, Bishop?
So if you have a team that's working and they make over $600, how does that work?
You still file them on the taxes. Let me tell you why.
Okay.
Because with the $600, they still can't afford to live on their own.
Okay.
So you provide more than 50% of their care,
Okay.
then you are still able to file them as a dependent. They can file their tax return and receive the federal taxes withheld back, right? If they qualify. Sometimes they don't qualify. They're like,
Okay.
why did I get a refund?
Right.
And kids just do stuff. They don't know. But
Tell me
start teaching them, right?
Right.
Say your allowance is $50 a week, right? I know that's low, but we're just gonna say
Right.
$50 a week, right? And only give them 30. And they say, why you only gave me 30? I took taxes out.
Yeah.
There you go.
Okay. Teach them early. Teach them about taxes.
That's a great idea.
Seriously. And then just put it in a jar for them on the side, you know.
That's a great idea.
I wanted to know, if you have a child in college and you're helping them through college, can you put that on your taxes?
Up to 24.
Up to 24, okay.
24 years
Uh-huh,
old.
uh-huh.
So if they're 24 and under
Right,
and they are a student, you still can receive the earned income tax credit.
okay,
If they are disabled, there's no age limit on the tax credit. I'm sorry, the earned income tax credit.
okay.
And then again, you can file anybody as a dependent that is living in your house. Again, this doesn't apply to parents. Parents don't have to live there. Parent could be in a nursing home. Parent could be being taken care of somewhere else, right? But you can still file them as a dependent if you pay more than 50% of their care. Now, a lot of times when they are living in a facility, you're not providing 50%. Sorry, microphone. 50% of their care. So again, it's that gray area, but the IRS doesn't really have a gray area, so you have to be careful with that. If you are not providing more than 50%, so 51% of their care, then you are not able to file them. So if your child made $30,000 and you made $40,000, you didn't provide 50%. And I see that all the time. It's my dependent. No, she could probably live on her own a little bit. Now she's batching you, you know. But, I see that all the time. No, she made 40 grand. You're not claiming her.
Wow.
But if she lives on campus, she's not actually physically in the house, but you're still paying for
Students count as a dependent up to 24 years old. If they're in school,
Okay.
they have to be a student.
Okay.
So if they're not, again, if they're laying around the house,
Okay.
now this is pertaining to the earned income
Yes.
tax credit.
Yes.
But if they are any age,
Okay.
you can file them as a dependent. Now, when they start making money,
Yeah.
then again, if they make up to a certain amount of money, et cetera, they have to file taxes. But again, you file them as a dependent because they cannot survive on their own
Right.
with $5,000 for the
Right.
year.
Right.
Did you have a question? She's like, I want to know if I need to file.
Right.
Especially when that she's whispering it to me. Dependent care benefits, so tax credits for child care. I just got a little shorter, but nobody noticed that. Tax credit for child care expenses while working or looking for work.
All right.
So, dependent care benefits. So that can be child care or dependent care benefits for an elderly person. So they could be in an adult daycare or some sort of facility that you take them back and forth to, but you pay for that. That is still dependent care. That's why it's not called child care anymore. It's called dependent care. Because you could be taking your older dependent, to a facility or to a day service or program or things like that. So that counts as well. Tax credit for child care expenses while working or looking for work. So again, you're looking for a job. Head of household filing status. I'm so sorry. Why did I put that on there? I don't know why I did that. Okay, whatever. You didn't see that part. Requirements for claiming a dependent. For qualifying child, take notes. They must be your child, sibling, or descendant of them. So brother, sister, right? Under age 19 at the end of the year, or under 24 and a full-time student, or any age if they are disabled. Okay? there's a residency requirement. They must live with you for more than 6 months. So 6 months and 1 day. They must not provide more than half of their own financial support. I'm just like repeating what I told you, but I want you to see it for yourself. Cannot file a joint return. So you say, well, how can they do that? So if your child is living with you and they got married, they have a husband and the husband is living there, they can't file a joint tax return unless she's just filing it to receive, you know, a refund or some money back. But if she's filing taxes with her husband and he support, you cannot file her as the dependent and they live in the house. People ask this question all the time, but they can't be married. But it happens that you might have a married child and they don't have any money. So you file them as dependents, right? Must have a gross income below $4,700. So we're gonna talk about actual earned income, right? Because again, if you're taking care of your parent and they receive Social Security, that's not earned income. It's not earned income. So Social Security benefits are not taxable unless you're receiving Social Security and something else. So if you're receiving retirement and a Social Security benefit, SSI, I want to say, then they start deducting from that as far as how much tax you pay. But in essence, there's no tax on Social Security income, like disability. But if you have retirement Social Security and you have retirement from your job, that's a whole different ballgame. They start to actually include the Social Security as
Income?
Earned. Taxable, let me say correctly, taxable income. So for the relative, you must provide again more than half of their financial support. Can be a relative, parent, sibling, or live with you full time as a member of your household. So say you have your brother there and his girlfriend is there. Again, they're both dependents because they don't have a job. Don't let anybody do this. If they do, you could actually file that person as a dependent on your tax return, the girlfriend, but you would only receive the $500 other dependent credit, not child tax credit or earned income credit. It's very limited, but trust me, people can somebody turn that off? It's a little cold. I must have been warm at first because I didn't even feel it.
You don't feel well. So.
No, it's the allergies. Like, it's crazy. I feel okay though. And then the dependent cannot be a qualifying child of another taxpayer. So you can't fight with like your kid's dad and claim half of the child. Like that. That's not how that works. Okay. All right. So you must provide the dependent social, right? They have to have a social or ITIN. So that's the number that you apply for just to file taxes for children or dependents that are non-U.S. citizens. Like they don't have a Social Security number. Social Security number gives you permission to work in the United States, but an ITIN is just for filing taxes. So it doesn't give you any permission or authority to work. Okay, that makes sense. Okay. Custody rules. So there are rules for divorcees. You don't like John anymore. John doesn't like you. One parent can claim the child as the dependent, typically the custodial parent. So the parent that the child lives with, right? However, there are forms that can be filed. So if the custodial parent says, hey, you've been a good dad this year, you can file, our baby on your taxes, then that custodial parent files a form 8332, and you're able to actually file that dependent if they didn't live with you for the 6 months. So there are, again, exceptions to the rule every time. Not every time. Katika said every time. No, sometimes. A person cannot be claimed, again, as a dependent by more than one taxpayer. So single taxpayer with a dependent child. I file head of household. I claim the child tax credit for $200. I earn $50K. So I receive a reduction in taxable income and I owe less tax compared to filing single. Why? Because I have a child tax credit now. So I get my $15,750 plus $2,000, but because I'm head of household, it's more than that, right? I just remember the 15 number because
Right.
All right. So any questions about the dependents? Okay, am I doing okay?
Yeah.
All right,
Yes.
got it. Do I have the rest of the time, or we need to leave early? Okay, cool. I'm gonna go through as much as I can.
Yeah,
This
you
is
running
a
the
class
show.
that
It's
takes
good.
me several hours to teach because it's just so much info. But I try to pull out the parts that you just really probably don't know. Okay. So if
Which is all of
leave,
it.
if I leave something out or anything, it's just because I skipped over it. I promise you, it's like 130 pages here.
Don't worry, you'll be
Refundable.
back.
I will. Refundable credit versus non-refundable. These are tax credits. So tax credits reduce the amount of tax you owe, but they come in two different forms, refundable and non. So the difference lies in what happens if the credit exceeds your tax liability.
Okay.
What is tax liability again? I made 50 grand. I have the deduction, and so now I have to pay taxes on my 40. Okay.
Yeah.
So I'm going to pay 10% on my 10,000, up to 10,000. I'm going to pay 12% on the rest, right? So these credits will reduce your tax liability.
Okay.
Sometimes it will produce a refund, but that is when the credit is actually refundable. Some credits only cover your tax liability. They're not going to give you any money back.
Okay.
That is a disconnect sometimes
Yeah.
with our taxpayers because it's like, I have this child tax credit, but the child tax credit only covered your tax liability because during the year you pay zero. So it's nothing to refund you.
Right.
Okay.
It's covering your taxes so you don't owe, but you're not going to get a refund from that. So that's the difference between refundable, non. Earned income credit is fully refundable, but it will reduce your taxable income too because it is a refundable credit. So sometimes it gets a little tricky, right? So a refundable credit can reduce your tax liability to zero. Okay, if it exceeds the amount of taxes you owe, then you receive the remaining balance.
Got you.
Okay, key advantage would be you get the full benefit of the credit regardless of your tax liability. Some examples would be earned income tax credit, the ATC, which is additional child tax credit, premium tax credit, that's for health insurance through the marketplace. You receive a 1095A, like if you sign up for that insurance. Some of the credit is refundable, depending on what you earn. You have to qualify for that program.
Yeah.
A lot of people took the benefit and they were over income, so now they're paying money back because it was, again, a low income program, right? American Opportunity Tax Credit or any of the college or education credits. Part of it would be refundable and part of it is not refundable. All right, so here's an example. Say your tax liability is $500. That's what I need to pay in taxes. I received a refundable credit of $1,200. So now I don't have to pay $500 in taxes because the $1,200 cover that. I'll get a $700 refund because this is a refundable credit.
Okay.
But let me show you what happens if it's a non-refundable credit.
Okay.
Okay, non-refundable credit, I'm gonna speak fast, okay, so stick with me. Can only reduce your tax liability to zero. So if the credit does exceed the tax that you owe, this is lost and it's just not refunded. Okay, you can't receive any refund beyond the amount of tax that you owe when the credit is non-refundable. So there's a lifetime learning credit that is part of the one of the education credits, so it's non-refundable. Retirement contributions credit doesn't produce a refund, it just knocks out some of your tax liability. Child independent care credit is non-refundable this year. Couple years ago, it was nice. They were giving out thousands, but now it just knocks out your tax liability. And then any foreign tax credit. So, you know, if you earn money in foreign countries and blah, 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 right? So I don't do that, right? I don't even handle foreign taxes. If you have a foreign tax, I send you to somebody else. I'm not dealing with that. But tax liability, say your tax liability is $500. You receive a non-refundable credit of $1,200. Just say you got a child independent care credit. Okay. The result is your taxes reduced to zero, but you don't get the extra $700 as a refund because it only covers your tax liability. So beyond the amount of tax owed, that's the difference.
It's just nothing.
It almost seems unfair, right? But it really does help people that owe taxes. See, if you're
Right.
getting a refund, there's nothing to add to that. So
Right.
it's not for you.
Yeah.
This is for people that are maybe not getting a refund.
Right.
Okay.
Right. You got to look at it differently.
Mhm.
Yeah.
It's all about perception. Really, it's about reality, though.
Right.
You
got to trick yourself.
Trick yourself.
You gotta weigh your options.
Yes.
Got you.
So
Okay.
here are some of the credits, right? $2,000 for child tax
Yeah.
credit. I'm not going to go through all of the eligibility, right? Because we're short on time. But there are several credits. I know we wanted to learn about some things that we just might see the numbers pop up on the screen. We have no idea what they mean, right? We talked about this. There's the education credit. There are requirements for these credits. Again, I'm not going to go through everything, but if you want to speed read really quickly, these are the basic credit types that you can be eligible for as a taxpayer. Okay? So there are several. Hopefully TurboTax is putting the credits in the right place for you. I'm telling you. Dan, you need a consultation, Dan. I can tell.
Yeah.
I can tell, Dan. No. Adoption credit is pretty cool. If you
Really?
2025 adoption credit. So all of these credits went up a little bit. But if you adopt a child for and you have adoption fees, legal costs, travel expenses. I adopted 2 kids. They were my nephews though, so they never counted them as adopted kids. They've just always been my sons. I got them at 1 and 2, and next month they will be 20.
Wow.
Oh, we're gonna
How old are these children?
How
I think 22 and 23 in March.
Okay.
So they came to my door in diapers, and I thought they were gonna go
You
home.
are
I thought they were gonna go home. They never went home. So yeah, I adopted them, but they at that time I didn't qualify for this credit, but it would have been so nice if I did, right? But that was a long time ago, so I didn't qualify. But you can adopt a child, and then this is carryover. So like, say it's non-refundable. So the 15,000, just say you only use 5 that year, it carries over. So that's a great credit. If you're up for, adopting kids.
Right. My
You know,
brother adopted
They pay me to do it now. Let me tell you. But yeah, raising 3 boys was something else. I don't even know. My hair is mostly gray. Residential energy credits. So if you do like solar panels, you get a new roof and new doors, right? Insulation, solar lights, all that new stuff. There are credits for that, but they do cap it, right? Like at $3,000. So if you spend 20, you only get 3. But hey, if you spend money,
it all comes together.
spend money, it'll help you right on your house. Invest in your house.
Invest in your
All right. Does anyone have a business here? No? Somebody might have a business online. So real quick, tax credits for businesses. These are not for personal or individuals. These are business tax credits. So say you hire someone who receives food stamps, or they were formerly incarcerated, something like that, right? You will qualify for WOTC, they call it WOTC, credits, right? For veterans, if you hire a veteran, you can get up to $9,600 per employee, but you have to hire them. So I used to be on top of that when I was in corporate America. I was like, do you get food stamps? I'm not trying to
in your business.
but I was running a branch, so I'm like, I want that $9,600 to hit my bottom line. So it was really a great credit if you have a business and employees. Disabled access credit, if you hire someone with a disability. Small business health care tax credit. You have to meet certain eligibility requirements. If you start up a retirement plan, they give you credits for the first 3 years. Child care credits, so if you help pay child care expenses for your employee, they give you some money back. Any research and development, so you're improving processes. I should get a lot of money for that. Improving. Every year I'm like, let's do something, let's add something. But it's called a research and development credit, right? Energy efficient commercial building credits, and then clean vehicle credits. So you buy a car and you get an electric car, then you can get up to $7,500 credit for having like a Tesla or something, but it needs to be used for business. Okay? We're not doing a real tax return. We're not doing a real tax return. I finished 20 minutes early. Like I ran through that, right? I'm trying to see, was there something, because I took a lot of stuff out. Is there something that you all wanted to know that I didn't go over?
I have a friend.
Let me hear about your friend.
But I told her I was coming here today,
Okay.
and she does not have a bank account.
Oh no.
And she has, she's low income,
Okay.
and she does not have a bank account at all.
Okay.
And she, do they still this year, because I heard in November of 2025 that they want to do everything electronically.
Are you saying direct deposit for her tax return?
Yes, and she
Yeah,
has
they're
a tax return, but she doesn't have, do they still hand out paper ones?
The IRS is not sending out paper checks, and what will happen is her refund will get held up for probably 3 to 6 months if she does not use a bank account. But what she can do is get a prepaid card and just have them load the money onto the card.
Oh, so she'll get a prepaid card herself?
She can.
Yeah.
Who files her taxes?
Yeah.
Who files her taxes?
She was saying somebody at Wabanzi Valley that they have
The
people
free
come in,
service.
the free service.
Okay, so then if she doesn't have a bank account, she can just go to get a prepaid card from Walmart or the Currency Exchange. The prepaid cards come with a routing and account number because it is an actual account.
Okay,
So
okay.
she can just give them the routing and account number for that because they will hold up her refund.
Yeah,
Oh, wow.
yeah, okay,
That's
because
good to know.
I heard that, and then I was looking it up for her and stuff, and they said November of 2025, they no longer hand out paper checks because of fraud and stuff. You know, people taking your checks or
So
whatever.
who you telling? Listen,
Okay.
this is why I get a lot of clients every year because they couldn't trust somebody just with their information. So everything that you're saying is true. There's so much fraud going on. They're catching a lot of people now who did like PPP fraud and things like that and unemployment fraud. You know, when COVID hit, a lot of people just went berserk.
Yeah.
But it's now coming back around. You have to understand that Uncle Sam is always gonna win. You can't
Alright.
think that, oh, I gotta wait. But I have people coming to me. I went live on my Facebook. I called it Tuesday Tax Talk with Tika, right? A lot of my friends called, that's my nickname, Tika. And they tuned in like, what? And I'm like, yeah, doing all this fraud out here. Like I was fussing because I'm like, it's not even that serious. Do you understand what under penalty of perjury means? That's a real thing.
yeah.
You're signing a tax return saying this information is true.
Right.
That's what you're signing. You're allowing someone to put information in for you that you're saying was true. So a lot of people, again, it's just like I see dollar signs, but you don't see the consequences of that. So
Yes.
there was a lot of fraud. There still is a lot of fraud. I mean, every year I look up, I see like 800,000 new tax preparers haven't taken a class. No credentials, just I'm preparing taxes, and then the next time
Get y'all taxes.
I'm training a team, and I'm just like baffled, like how you gotta at least know, you know, some of the tax law. So tax preparers are not certified. There's no such thing, right?
Okay.
You can have credentials though.
Okay.
So my credential, right, I made sure that I completed my training. So when you look me up on the IRS registry of tax professionals, I'm a real person.
Okay.
So I use that when I'm marketing to people. They're like, I don't know if I... Listen, you can't, if you didn't take the classes, you're going to know tax law. You can't just pass it from going on Google. You really have to take the class. AI, ChatGPT tells stories. Let me tell you, ChatGPT does not have all the information.
Well,
And I even did a few tests myself just to see. So, and so that's why I write my own curriculums. It's okay to have a basis, right, of information. I might say, hey, I need an outline for this, but me, again, I can tell you everything that I told you today without even looking at this stuff. Now, again, my numbers might be off, but I'm close.
Right.
I mean, could you imagine having to remember there's a max of 150, 25%, 50%. You cannot remember that. So forgive me, Dan.
Yeah.
Dan was like,
All right.
It was $1 more. You were so good, Dan. No, I appreciate your participation and questions, though. But on a serious note, taxes. A lot of people just, we don't get it. We perish for a lack of knowledge, right? So although you're like, I shouldn't have to pay, it's a law. You have to pay.
Right.
So you just have to, and if you don't pay, they will garnish your wages.
Yes, they will.
Take money from your bank
Yes, they
account,
will.
and there's nothing you can do. So at the end of the day, pay your taxes. I know it's unaffordable and things like that. All true, but get on a payment plan.
Right.
If you can't get on a payment plan, there are other options, right? There are abatements, there are forgiveness, opportunities. There are offers and compromise. Like there's so much that you can do instead of just saying, I'm not going to file.
Yeah.
I have people that I filed taxes 6 or 7 years for 6 years at once. Why? Because now I need a house. Now my kid wants to go to college, and so now I'm like, I have to charge you all this money because you need 7 tax returns done at one time. Right?
Oh, wow.
Yeah.
This one
So
I'm gonna have to be separate.
Yeah.
Each year.
I thought you
Each
could
year.
all put 7 years together. They each have to
like
be separate.
file 1 tax return.
Yeah.
No.
Bishop, you come back to class.
Well, they always say you can put years together. I just thought it was,
No, they meant
Who is the they?
No, whoever they is.
Yeah.
They told the story, but it's not putting them together.
No.
Wow.
Like I can file your taxes back 10 years.
Yeah,
Yeah.
they go
But I can only file 3 years electronically. The rest we have to send a different way.
Oh,
Right.
wow.
Again, it's just it's a lot of time.
Wow.
It's a lot of it's wastefulness because again, just say in 2023
Yeah.
you had a tax bill for $2,000 and you didn't file taxes in 24 or 25. That tax bill for $2,000 is now accruing 2 years of interest because you did not pay it, and now you're also behind because now you're missing tax years filed, so you're out of compliance. So anything that you do ask the federal government to forgive you, maybe for your tax debt, you didn't file your taxes, so now they're not considering it. It might be scary and it might sound crazy, but just file your taxes. And if you don't know what to do, find a professional. Of course, I'm going to plug myself.
Of course,
Absolutely.
of course.
I am
So,
taxes made better, right?
Yeah.
But outside of that, just find somebody that is trustworthy. They can read.
You're right. Yes.
All right. You're right. You're right.
Shell of companies.
And they're knowledgeable about tax law. Were you trying to ask me a question?
Yes.
I'm so rude.
No, that's okay. I want to tell you about a horror story
Okay.
about taxes. When I first met my husband, he was having this guy from his job do his taxes. And I guess he didn't make enough for the taxes. So the man told him, well, we're just going to put you down that you have this business.
Oh, he
And
said we're just going to put you there?
Yeah, he just invented a business for my husband. And he told me this, right? We were dating. He told me this. I said, what? Right? I'm really tight with my money and know where it goes and who's spending it and all. I said, what? Yeah, Tanya, you should let him do your.
It's the same husband you have today.
Yes. I've never educated him.
You got him together.
And so
He said you should do it.
Yeah. I said, no, you don't have a business, so now you're lying to the government. You know what happened? That year, they came and got that guy and took him to jail.
Oh, wow.
For all the taxes that he was doing,
Wow.
that he was putting extra stuff on things, they came and got him.
And let me tell you how I believe you, because if you just Google taxpayer fraud, they are coming for the tax preparers that did that.
Yeah,
Let me tell you something. Something about me.
Thank you, Jesus.
Something about Katika, Neal, and Taxes Made Better. My brand, the whole brand, is the Made Better brand. Made Better Realty. Made
All right,
Better.
it's all consistent.
Everything is made better. You're gonna see that in my name.
Right.
So that's what I stand for.
Yeah.
And if I'm not making you better, then I'm causing you a problem.
All right.
So when when I prepare tax returns, a little couple $1,000s does not move me.
Right.
Because my freedom is
Yes.
more important. I'm not good for jail.
Right. Come
I'm
on.
not good for jail. I got pulled over one
Or
time,
yellow,
and
or whatever.
they said that I had a warrant for driving that ex.
Right.
I didn't marry him.
Right.
But an ex's car, and the license plates were expired. So the cop was like, he came over with handcuffs. I said, "What are you doing?"
Right.
I was on 88. We're on the side of the expressway, okay? And I said, "What are you doing?" Because I was going to drive the car home for my friend. They were taking him away. He didn't even do anything. It was one of those situations.
Right.
And he started cussing. They're like, "We're taking you to jail." So, and they're like, "Miss, you can drive the car home." I'm like, "Cool, I just want to get off the 88. I'm on the side of 88. You just
Let me go.
Yeah.
So he came over with handcuffs. I said, "What are those for?" He already handcuffed my friend. Like, "What are you doing?" He said, "Well, you have a warrant." I said, "For what? What you mean a warrant? Me? Warrant? Like what?" And I hear on the what CB or whatever.
Right.
He was like, she was like, "Yeah, Katika, Neal." I said, "Oh, this is real. Like, for real, have a warrant for me." So I'm terrified. I was sitting there with handcuffs on. I said, "Wait a minute, please don't handcuff me in the back. Please don't handcuff me in the back." I'm saying all type of stuff. I'm like, "I'm pregnant, I ain't had kids." And I was like, "I'm having a baby." And whatever, just don't touch me. He said, "Handcuff her in the front." So they handcuffed me in the front. And I'm like, "You handcuffed me for real, right?" So he said, "Yeah, you have a warrant for expired license plate." I said, "Are you serious?"
Right.
And I'm like, "Oh," he's like, "It was a truck." I said, "That was an XX, like, I don't even remember." So I've been riding dirty for 2 years.
Oh, wow.
I didn't even know because I don't break the law. I don't do anything.
Right.
I don't get pulled over. I'm just volunteering to drive the car home.
Right.
Oh.
I'm not for jail, y'all. Let me tell you.
Right.
He
Yeah.
asked me, did I go to jail?
Did you?
No.
Oh, okay.
On the side of the expressway, I heard the lady cop, she said, "Oh, well, her bond is $500. So he said, "Well, usually, if you have $500. So I was like, "Are you playing with me? Like what?" He was like, "Yeah, if you pay $500. I said, "Right here, like on Route 88, on the highway 88, you gonna let me out of jail?"
Right.
And he said, handcuffed me. He said, "Yeah, you'll just have to go to court and clear it up." I said, "I have insurance on my own car. I don't even talk to that person anymore." So he was like, "Okay, it's $500. So I said, "Unhandcuff me."
Right.
So I looked at my purse. I had like $180. I said, "Could you take me to the ATM?" And guess what he did?
He took you to the
He
ATM.
took me to the
Come
ATM.
on.
I told him, I said, "I'm no good for jail."
I know that's right.
So when I tell this story, everybody cracks up because
That
you
is
see
hilarious.
me in jail, like me in jail.
Right.
I said, "Oh no, baby, I'm not
Right here to this
Jail?
ATM.
like the real jail."
Right. Real jail.
The handcuffs were too real
Did it,
for me. I said,
did it
"Oh,
for
no."
you.
He said, I gotta watch you." I said, "Listen, I'm not going
No.
nowhere." Take me to the ATM, and I gave that man I counted it out in front of the camera.
Right.
And he let me go. It was a real thing. 'Cause I thought he's like, "You can pay right here." I said,
I
"You
didn't
about
know
to
that
take my
either.
money?"
Right.
And he was like, "No." I said, "Oh, I can't go to jail."
I know
Take
that.
me to the ATM. He was like,
And
he told he's like, "I never did nothing."
Wow. But they said, "But God."
But
as
God.
they say.
I wasn't going, y'all.
Right.
Yeah.
They take me to jail. No, I'm not going.
Right.
But anyway, that's a funny story, but it really happened in real life.
That is
And after that, I make sure I periodically check my driving status, even though I don't have any offenses. Like, I didn't know. He was like, since such, I said, 2 years I've been right. I said, they're going to put me under the jail because it looks like I was running away, but I didn't know. And they knew. They're like, she doesn't have any other, any.
Yeah.
Somebody else's car? I'm going to jail?
Yeah.
No, take the 500.
Right.
Yeah.
But anyway, any other questions?
Yeah. Yeah, but they took
Dan, you got pulled over, Dan.
So let's say you want to file. So where do you get the forms? Do you use forms or you go in the cloud? What do you?
Oh, me?
No, I'm just saying.
Anyone?
What do you? Yeah, Joe.
So are you
Go on
saying
the
you
street.
just want a different program than
I don't want to do
Turbo?
TurboTax. I don't want to go in the cloud.
You want the 1040?
Oh
Or
man,
you do yourself?
what I'm saying is we're living in today's time. Like everything is gonna
They're gonna
be.
make me do it in the cloud.
You can go to irs.gov.
I can't do it on paper no
print-
more.
Hear me out. You can go to irs.gov. you can print any tax form that you need.
Oh,
But you're gonna need the instructions, because you're gonna have to go line by line and fill it out. Or you could fill out the TurboTax version and still print it out, right? But your information's going in there. It's just not being transmitted
Or saved.
electronically. So you can still use the forms and just print it out. Is that what you just don't want to? You don't want to submit your tax return any longer through TurboTax?
Because I think my understanding is now they're gonna save my information in the cloud.
Yeah,
At
because
some data center or something.
because in 2 years or 3 years you may need a copy of your return. So yeah, they do save it.
Yeah, they do.
But
They
I might.
save it, but I was saving it in my hard drive before.
Mhm.
But see, now they're gonna have it.
Eliminating that.
Can you get it at the post office like you used to, or they don't do that
Tax
anymore?
forms?
So
Tax
I don't
forms,
know
yeah.
that they carry paper tax forms at the post office. The
They used
library
to.
has done that.
Yeah.
But
library.
you could just print it on
I never knew that was
print it
a
on
thing.
offline.
Yeah, I
Yeah,
used
we
to.
do it all the time.
Didn't you just mail it in?
You can mail it in, yeah.
Who's buying
I
stamps?
fax tax returns in that are like prior year
She
or
said
need to
advanced
be
tax.
needs to be submitted
Yeah.
outside of being electronic, because sometimes people don't have their PIN number. They have identity protection pins now, so no one else can file your taxes, things like that. So sometimes I can't submit it electronically, or if it's a prior year, so I can do 2025, 24, and 23. But if you need to file 22, then I fax it.
Yeah.
I fax it. So I don't give everybody the fax number, but I do have a fax that I use. I never mailed anything because it's just like 8 months.
Yeah,
Right.
yeah.
They're still on like last year's paper returns.
Yeah,
is
I
bad.
know.
But you're right, they
I know a couple
have
years
that
ago,
problem.
we filed taxes, it was 6
That
months
information
before we got
a lot of
anything
times
back,
for your-
because
people
we
tax.
had donated a car to, what is it, the veterans? And they gave us the paper for it, and there we
They
donated.
wanted proof of that.
But yes, and we gave it to our tax person that was preparing our taxes, but it still took them 6 months to get our taxes back to us.
Electronic filing is the right way to go.
Yeah.
And a lot of people, I'm just going to mail it because I won't have to pay. You still have to pay your tax debt by
Yes.
the 15th, or you accrue interest. Like,
Yeah.
there is no way. Yes.
You said electronic file, you mean you can fax it or it's gotta be?
Electronic filing literally means to transmit your tax return to the IRS through electronic means, like through their system, not a fax. So not that fax is fax. E-file is what I'm saying. Is literally called e-file.
Right, and there's different
Transmittal.
softwares for the e-file?
There are a lot of stuff is cloud based. I can't even think of one where you buy
How
it.
does a tax preparer do it then?
I have branded software, right, that's been around for like 30 years. But my software is branded to my name, so it's called Taxes Made Better Pro. So
You
like,
are the
when I send you my
Your TurboTax.
Right.
She's the TurboTax.
I am, so I'm an ERO, right? Electronic Return Originator. Okay, so I'm TurboTax, but I work for
Better.
myself. So when you come to me, I'm gonna enter your information accurately. I'm gonna make sure that everything makes sense, right? Because I can kind of spot out even if the software makes a mistake or has a glitch. It's software, it's not human. That's why I'm saying, I just recommend, again, if you are not sure, that you at least speak to a tax professional for guidance. Now, that's not always going to be free, right? So, but at least you'll know that it's being done correctly and everything is being, you're paying, like my friend Bishop said, the least amount of money in taxes. Because we pay them. Some people just get refunds and some people don't. I never get a refund, ever. So I don't know what that feels like. No, not since my kids. I told you they're 100 now, so I don't.
They're 100 now.
They don't live with me, so.
You know what? But I one thing that you said, a lot of things, but one thing that you really said that clicked for me is your tax bill. I never thought of it as a bill. And when you said when you don't pay the bill and then it's late, so now I was able to picture that as your electric bill. If you don't pay your electric bill, it's late.
It's late and you pay a fee.
And you pay interest.
You
on
pay
it.
And then you gotta
something
call,
on it, right?
you gotta
You
call
have
the
to call it,
make
make an
payment.
arrangement. So it's the same
So
thing.
your
The
taxes are
IRS
the
is a
same.
bill.
It's a bill.
But their bill is different. Like
Yeah.
the light bill might put it on your credit report, but the IRS is going to take their money by any means
Any means
necessary.
necessary.
Yeah.
Right.
Yeah.
So before we go, it's 8:00. Did anybody learn anything?
Oh,
Oh,
yes.
God,
Oh, yes.
amazing.
Yes.
Just can you tell me one thing you learned, just so I feel good?
I just told you what I
You did.
You know, with the standard deduction, as opposed to going itemized and everything. So I like that. It is better. Just if you didn't make a certain amount
Right.
over to where it goes over the item, where it's
Itemized.
profitable
Yes.
to itemize. So might as well go standard. I like that part.
Yes, ma'am. Anybody else learn something?
I learned about the medical,
Okay.
and also my brother has adopted 3 of his grandchildren.
Did he?
Yes, and now I'm learning about the deductions. He still does taxes, but I didn't know there was a credit for that. You know?
There, it's called an adoption credit.
He
Tell them
adopted 3 of them.
to at least ask about. I file for anybody. I have clients in Vegas. I have clients. My newest state is Maryland. So I have, and guess where he found me?
Facebook?
He just on social media.
Oh.
He was like, "Your Facebook was the most professional." I tell jokes on Facebook. And I talk about the Lord, right? Everything else is business. I don't post anything crazy or you want to like, oh, let me block her. It's always good.
You at the
inspirational
beach?
things.
We ain't seen none of that.
Now I've done the beach before, but it's usually marketing. Believe it or not,
Right.
I market that way. I say, because I was giving away vacations last year for people that referred a certain amount of people, so I would just pay. I have a program that I partner with, and so I could get like a $200 round trip for you to Vegas. So I would post a video of me in Vegas, like, because I've done a lot of traveling, and say something like, if you file your taxes with me or refer somebody, something like that. But not like, hey, I'm out here because first of all,
Right.
by the time I post a picture, I've been home 10 days. You'll never know that I left my house.
Right.
So you can rob me.
Right. She said so you can rob me.
They do that. Dan, did you learn something, friend?
All right.
What you learned, Dan?
Yeah, I learned there's a TurboTax Junior.
Dan, I'm done with you, Dan. You owe me lunch, Dan. Today. He's like, I still think I want to use TurboTax.
You won't let that turbo
Have you seen the Liberty tax return people?
Oh, out there
Out
dancing,
there
yeah,
with
with the
the-
sign.
Yeah. You so funny. Did you have something, Bishop? Or you?
Yeah, I learned that multiple year filing is not what I thought it was.
Yeah, man.
I mean, I got relatives that say it go
Oh
like
my
6
God.
years or more.
I am horrified to know
I think
that you've
Trump
been
was what,
telling
7
people
years
that.
behind when Trump ran for office. What he like 7 years behind or 14 years?
We're not gonna put that on live.
Right. Oh my God.
Yeah, it is.
Good night, everybody.
Good night, everybody.